US President Donald Trump blinked, and it came hours after China slapped its own retaliatory tariffs on America's escalated reciprocal tariffs, which the US imposed because Beijing did not withdraw its tariffs levied in the aftermath of Trump's 2nd of April reciprocal tariffs. Spare a thought for US Trade Representative Jamieson Greer, who was midway through a stoic defense of Washington's reciprocal tariffs in the United States Congress when news of President Trump's unexpectedly announcing a 90-day reciprocal tariff pause for most countries broke via a social media post. The post sparked off a war of words between US Representative Stephen Horsford, who's a Democrat from Nevada, and America's top trade representative here. Representative Horsford tore into Greer on the House floor, chiding him over the fact that he was ostensibly unaware of what was about to unfold and saying that his boss had pulled the rug under his feet even as he sat there defending the indefensible.
Mr. Trade Representative, are you aware that the tariffs have been paused?
I am, yes.
When were you made aware of that?
Well, I understood the decision was made a few minutes ago.
Sitting here.
Under discussion.
Sitting here, under discussion. So did you know that this was under discussion, and why did you not include that as part of your opening remarks?
So typically what I don't do is divulge the contents of my discussions with
What are the
President
details of the
Congress.
pause?
Well, my understanding is that because so many countries have decided not to retaliate, we're going to have about 90 days.
No, excuse me? China increased their tariffs on the United States. Trump blinked.
What's the blink, sir?
What do you know about this pause? What are the details of it?
Well, the details, as I understand it, is that China continues to retaliate. Other countries didn't retaliate. The president 2 or 3 days ago said we wanted to negotiate with those countries that asked for meetings. That's what we're doing.
What are the
We've had
details?
discussions.
How long is the pause? How many days? How many weeks?
I understand it's 90 days. I haven't spoken to the president since I've
So
been
the
in this
trade
hearing.
representative hasn't spoken to the president of the United States about a global reordering of trade.
Ironically, this 90-day pause is precisely what a White House representative had alluded to a couple of days ago, sending markets soaring momentarily before it being promptly dismissed by the Trump administration as fake news. So Trump had paused tariffs on most nations for 90 days, including India, while raising tax on Chinese imports to 125%. The US Secretary Scott Bessent named India as among those willing to sit at the table rather than escalate. This came amid a global market resurgence after a week-long meltdown, mostly out of relief, as Trump attempted to narrow what had become an unprecedented trade war between the United States and most of the world to now a showdown between the US and China. This is what the whole thing always was about, perhaps. What has now been removed by the US is the varying country-by-country reciprocal tariffs that Trump had imposed last Wednesday. The 10% tariff was a baseline rate for most nations that went into effect earlier. This is still in place and likely to stay on. There is some logic to that in what has otherwise been a largely illogical exercise. The objectives of all these tariffs, as stated by Washington over a period of less than a month, have been shifting, starting with national security concerns such as fentanyl and immigrant inflows to the tweaked narrative of the need to balance the trade deficits and putting a stop to America being short-charged by trading partners. But there is another, slightly more cogent reason in that mix, that the tariffs will bring in money for the proposed tax cut expected to be renewed by the Trump administration later this year. The baseline tariffs are expected to essentially fund these tax cuts and so will likely continue. According to a New Delhi-based analyst close to the government, Trump is clearly not worried about global imbalances or the sustainability of the global economic order. He thinks of trade balances like business deals. The country with a trade surplus is always the winner. For a man who has generally been fickle with his views, tariffs are an issue where Trump has been uncharacteristically consistent. In 1987, long before he voiced any intention to run for public office, Trump took out a full-page newspaper ad warning that Japan was taking advantage of the US while pointing to the massive trade deficit between the two countries. Like most things with Trump, this was essentially a personal issue which likely stemmed from the fact that the real estate developer had just a few days prior to these ads lost out on a bid for a grand piano in New York to a representative of the Japanese trading house. His views on tariffs have endured through these years, even though there is very little economic logic to the imposition of large-scale tariffs by a country like the United States of America. Trump has also surrounded himself with a cabal of mercantilist economists like Peter Navarro, the author of Crouching Tiger, Will There Be War with China, in his second term, who really believe that deficits are a bad thing. They have played a role in reinforcing Trump's original views. So while conceding that Trump's long-held view is perhaps the wrong way to think about mercantile deficits, his crude trade policies, the analysts quoted above said, may be the only thing that spurs change in global trade imbalances. There is no way that China or Germany, for instance, would ever voluntarily refrain from running export surpluses. These countries, which like Trump's Washington, define their economic models in terms of trade imbalances, may only be more sophisticated in their defense of it. Trump's approach is to take a political sledgehammer to force the countries such as China to change, according to the analyst. There is a sense in Washington, D.C. that China has gotten away with low-cost manufacturing for too long. No other country has had the same level of global dominance over product categories since the early 1970s. This is more significant now than in earlier decades when trade represented a much lower share of global goods production and consumption. For instance, the global trade to GDP ratio in 1970 was around 25%, but by 2022 that climbed to over 60%. Weakening domestic demand alongside export facilitating policies in products where China is the world's most dominant manufacturer has led to prices collapsing globally and driving other national producers out of business. While the benefit of this has been a phase of sustained lower global inflation, China has simultaneously created a progressive stranglehold over global manufacturing, which is a level of manufacturing dominance by a single country seen only twice before in world history, by the United Kingdom at the start of the Industrial Revolution and the United States just after the Second World War, according to a research by the Rhodium Group and from views flagged by Noah Smith's Manufacturing is a War Now piece. What makes China's extraordinary dominance in manufacturing worse is the continuing weakness in domestic demand in China. That too comes from the problem of China's unwillingness to vacate its earlier specialization in low value added manufactured products as it moved up the global value chain. This has concomitantly led to a weakness in Chinese demand for imported goods, which was expected to rise if China had ceded the manufacture of low value added manufactured goods as it progressively moved up the value chain. So more than Beijing's export competitiveness, weak Chinese imports explain this continuing imbalance. Trump has ostensibly set out to address this imbalance. So while many might not agree with Trump's solution, it's difficult to wish away the problem he wants to fix. So in that sense, Trump's tariff action has come full circle back to the originally intended target, which is China. Trump has been waiting for a call from President Xi Jinping to discuss what can be done on tariffs and secondary issues such as the fate of TikTok. That phone call never came, even though sources attest to the background negotiations at lower levels. So what are the structural issues with the American economy? The US economy relies heavily on trade, and that's part of its structural construct in the post-World War II era. This is because the American economy consumes more goods than it produces domestically. As a result, its imports are almost always higher than its exports, resulting in a trade deficit. And why is it so? Well, when a country consumes more goods than it produces domestically, it needs to source the additional goods from other countries through imports. And that is resulting in a high trade deficit, which is the gap between what it buys from other countries and what it sells to them. In that context, high tariffs are a self-goal for the US, coming at a time they did. The American economy was actually growing more than its own potential growth of about 2%. Unemployment was really low and inflation was coming down to levels where the US Federal Reserve would have gone on to reduce rates further. Tariffs have ended up spoiling this soft landing achieved by policymakers in the United States, which seemed implausible a while ago. The impact of even these 10% tariffs is that prices go up sharply for the US consumer, who then curbs spending. If the flip-flop on the tariff outlook continues, investors get jittery and the investment impetus slows down due to these uncertainties. So aggregate growth in the US economy then slides even as there is higher inflation and the Fed is not able to cut interest rates as much as it would have liked to. All of those things are bad for the United States economy.